It's about that time of day again. My name is Joseph. It's Tuesday evening, June the 20th. Welcome back to your nightly newsletter. We've got crude oil, S&P, gold, euro, and DAX tonight. Crude is bearish with a wedge, which tells us to look for failures and traps up at resistance levels ahead of tomorrow's inventory report. S&P is bearish and rotating off the low of a channel, so we're looking for selling opportunities up at overhead resistance for a target going back to yesterday's low. Gold is bearish with a spike in range tonight, so we're looking for selling opportunities using resistance levels overhead with a target going back down to the low. Euro is range bound, and we're using the 2-try rule to look for buying opportunities going back inside the range on Wednesday. And of course, the FDAX is bearish, and we're looking for selling opportunities up at the battle zone for a target down at that weekend gap, still left open right from last week's close. I got another great newsletter in store for you guys and gals tonight. We get some major news on the counter tomorrow. Finally, haven't any news here all week this week. Had some big ranges. We got some trading ranges. We got some big strong trends to work with. I got a great video and a great plan of attack for Wednesday's session. But before we jump in, though, I do want to remind you the only place to watch the full-length version of this video is on our blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link and come join me here on the blog at Sideways Markets and watch the full-length version of our nightly newsletter. While you're here, don't forget, join the mailing list. I'll send you an email every evening, Monday through Thursday before 8 p.m. when the nightly newsletter goes live. Grab that social media links in the lower left-hand corner. How easy is that, right? Follow me on StockTwits, Facebook, Twitter, LinkedIn, right? Pick your flavor and follow me on social. Always important, right? Links and charts being posted throughout the week there. And of course, don't forget to grab that charts. All the charts from tonight's video, you can have those charts on your computer for tomorrow. How easy is that? Right where it says click here to download today's charts. Download those charts and have them ready for your trading session tomorrow. But before we jump in, though, don't forget to grab your free pass. You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can guarantee you that. Grab that free pass in the upper right-hand corner. Don't forget, if you're brand new here, we got a great frequently asked questions page, and I'm always here to answer your questions. Hit me up on live support if you need any help along the way. Boy, it's been a great week here so far. Wednesday session coming around the corner here. Tomorrow's hump day, Wednesday, June the 21st. Let's bust this thing open by looking at the economic news for tomorrow, and then we'll jump into some charts and put the plan together. As you can see, tomorrow's pretty much the first big news event of the week. It's been a pretty quiet week here, as I mentioned in last night's nightly newsletter. Really, the big news across the board tomorrow will be the existing home sales number. Home sales have been a little bit anemic this year so far. Those existing home sales numbers have really been the ones that have really taken a nosedive. New home sales have been rocket fuel this year, but existing home sales kind of like turning in that old beat up junker and buying a new car. It seems a lot of homeowners right now are choosing to buy new rather than buy older homes. So we're looking to see what that number comes out tomorrow. That will be a pretty good leading indicator of the health of the economy here in the U.S. And of course, don't forget, tomorrow is Wednesday, right? So we definitely have the petroleum status report on our radar tomorrow. Don't forget, couple things about the petroleum status report, couple things about the inventory report. First of all, tomorrow morning at 10:30 is the report. My cutoff is always 10:15 a.m. Eastern time. And then I always give it about 5 minutes after the news comes out. I never quite know what the news will do. So depending on after the news comes out, sometimes it's just way too crazy after the news comes out. But sometimes we get some pretty good patterns afterwards. It always has to do with how the personality looks after that news comes out. But 10:15 is my drop dead point tomorrow morning. I'll be with all the clients, all the advanced members in the trade room tomorrow morning, be watching that inventory report. So Wednesdays, early in, early out for crude oil traders. 10:15 is the official cutoff before the inventory report comes out at 10:30. And then again, give about 5 minutes afterwards. Another thing I want to mention about the inventory report here for tomorrow. Oftentimes we see complete trend reversals. We'll take a look at that in a moment on the chart. But I do want to remind you, don't be so fixated on one direction tomorrow. Read the market's personality, know who has control, where their objective is, and where we in relationship to that objective, right? And so don't be married to one side of the market tomorrow. We're very bearish right now on crude, and you'll see that in a moment. But again, oftentimes ahead of these inventory reports, we see a full trend reversal. Obviously, no proof of it yet, but that's very common ahead of inventory reports. Last thing, third and final thing about tomorrow's inventory report, below tonight's video, I'm going to post all of the inventory support and resistance levels you guys can use for tomorrow. I'm going to have them on the chart tonight. I'll have them below this video on our blog at Sideways Markets. There's a link that says click here to read more. Follow that link, and that will take you to the part where it gives you all of the inventory levels of support and resistance for tomorrow. So look for additional support and resistance levels either attached to the chart, which you'll see in a moment, or if you follow me on Twitter or Facebook or StockTwits, right, I put those out about an hour and a half ago. That's some reason to follow me on social. And again, I'll have them posted below the video tonight on the blog. So don't forget those levels for tomorrow. Short-term support and resistance. That'll only be good for Wednesday's session. So get to it early. Don't be married to one direction tomorrow, right? Again, because oftentimes we do see big reversals. And again, use those short-term support and resistance levels I'm posting on the chart. And of course, below the video tonight, right? Tomorrow only, right? As of end of day on Wednesday, those levels are dead. With that said, we'll be in our trade room tomorrow morning at 8 o'clock Eastern time with all the advanced members. I look forward to seeing you guys with us, and we're going to execute this strategy accordingly. Let's jump right in. How about some crude, S&P, gold, euro, and we can't forget about the old FDAX tonight. We'll wrap up tonight with the FDAX. Crude is bearish, yeah, just a little bearish, right? And trying to finish off a wedge target ahead of tomorrow's inventory report. Now, the API report just came out and gave the sellers a perfect trap high and looking for a move back to retest today's low. Now, unfortunately, it's a little bit too late to get in now. I wouldn't recommend selling now. A little bit too low. We're down around the moving average. We're expecting buyers to come in and try to buy this, at the very least, profit taking from the sellers. So we don't want to sell here. We want to see another selling opportunity come with another trap high after we see more confirmation going lower. Now, one thing to keep in mind for tomorrow is that we oftentimes see that trend reversal, okay, ahead of the inventory report. So again, don't stay married to the downside. We might be in here tomorrow morning at 8 o'clock Eastern time, and this market might be tearing higher, making up for ground they lost today. It's very easy, right? It's very easy to anticipate we may see a short covering rally, right? A reversal here ahead of that inventory report tomorrow. It's obviously bearish right now. I'm not trying to call a bottom on anything here at this point, right? But be aware, we may turn directions ahead of the inventory report because it is quite common. The first thing that stands out in this chart here tonight is the wedge. Very strong move down, never pulls back to the moving average. That tells us a spike. Anytime we have a spike, we always know spike in channel, spike in range, right? It turns into a spike and wedge. Now remember, wedges are really, really great patterns because they tell you as soon as that wedge range gets too narrow, you're going to get a big correction. And you can see that's exactly what's happened. Nice big correction up to a prior level of resistance. Beautiful trap high for all the sellers who didn't want to chase the move lower, and now they're looking for that target going back down to that low. Most important thing right now, the objective for the bears is to retest 42.94. It is not the final objective down at the wedge. So short-term target, 42.94, but we have to assume the big target here for tomorrow is going to be down around that 42.5 area. I've got 42.54. Another aspect of a wedge you want to be aware of is that you really want to give it kind of a range down here. It's very easy for this trend line to be drawn a little bit wider or a little bit narrower, right? So maybe a little bit higher or lower. So I do want to remind you, wedges are great for telling you what direction you want to be trading in, bearish of course at this point, when to expect a big correction when it gets too narrow inside the range, and then where the targets are, right? First target back down to retest the low at 94. Second target's going to be, right, final target down at that. Again, it could be 42.60. It could be 42.50. Again, it could be really anywhere in that range of prices for tomorrow. Now, with that said, we're also going to be watching these inventory levels for tomorrow, some important support and resistance. Again, they're only good for tomorrow's session. At the end of the day tomorrow, tomorrow. We'll get rid of them, right, and we'll go on with our merry way, right, into Thursday. At this point, again, if you miss that trap high, and a beautiful example, by the way, of a two-legged pullback, which I always like to mention here when we get a chance to, right? A beautiful two-legged pullback for those bears. So now the sellers, right, the experienced traders are already short off the high. We don't want to buy. We want to sell down here. It's too bearish to be a buyer. So what's the plan right now? Well, if I want to be a seller, I want to see the price continue lower, really shake off any possible buyers here, but I don't want to sell down here, right? That's not the goal. The goal is not to sell down here. The goal really right now is let's get this price down and then up for a trap high so I can sell it high again. Again, let me see some proof, right? Show me some proof as the market goes lower. I want to see this market really fall apart, but then I don't want to sell it down here. I'm waiting to sell right up here with a trap so we can move it back down again. The key is in a bear market, I want to sell high. I don't want to sell low. But oftentimes in a bear market, if you didn't get a chance to sell high, you don't want to sell here around that moving average. Not a great spot to be a seller, right? If you're going to sell above the moving average, make sure it's uncomfortably high above that moving average. As the price pulls back to the moving average, we now expect to see buyers re-enter the market. So it's pretty easy to see. We can easily see this market bounce up, drop back down, show us buyers are failing. Then we know where our levels are, up and back down, right, to sell. Now that may, of course, play out a little bit lower. We may see something more, right, like this. Right, it may be something a little bit lower. That may be your trap high, right? It's obviously something we don't know enough about yet. But looking for the price to commit lower, that way I know the buyers aren't going to hold this thing and run this price higher. Because again, like I said earlier, we do oftentimes see short term. You know, they're not going to be the rest of the week, but we oftentimes do see short term rallies or counter trend moves ahead of the inventory report the following day. By the way, how would this market turn bullish, by the way? Strong move up, hold that pullback, and go. Strong move up, hold that pullback, and go. I have no problem being a buyer into the inventory report tomorrow. I don't care what direction I trade in. Up, down, sideways. I don't care what market it is. It doesn't matter to me, right? But I do want to make sure I follow the trend because that's where dependable patterns are going to come. So new higher high, hold that pullback to the bulls. Hold that pullback to the moving average, and then the buyers are going to be hunting for that high of day, right? That high of day up at 44.69. And again, right now, it looks like a pipe dream, but I'm telling you, ahead of the inventory report, right, we see some crazy stuff on this market as traders almost try to position themselves later on in the week as the market comes tumbling back down. Wouldn't surprise me one bit if we spend tomorrow's session buying off a bull channel, right, buying off a bull channel low, and then just see it Thursday, Friday come tumbling right back down again. Right now, sellers move lower to confirm, trap high and back down, move lower to confirm, trap high and back down, move lower to confirm, trap high and back down. You get the point, right? I want to see it confirm lower, sell high with traps and failures above the moving average, and then again, target back at 94, and then again, keep an eye on that range around that wedge. As it goes lower, don't chase the market lower, right? If you missed a chance to sell high, not to worry. Be plenty more where that came from. Watch for a possible spike and range down here, spike down. You know, same thing. Trap high, back down, right? Sell it as it goes up. Bring it back down again. Just don't sell low. That's a great looking chart there on Crude. Don't forget the inventory levels for tomorrow. And again, you're not alone on this. You can come join me tomorrow morning as an advanced member, and we'll execute the strategy right along with everybody else. Let's keep going here. How about some S&P? S&P's bearish and rotating off the low of a channel as it tries to retest the prior day low. That battle zone would really make for the best selling opportunities tomorrow, but we'll also be watching that overhead resistance trend line, right, for failures and traps as well. well. As you can see here, there's a couple different ways in which you could look at this. What stands out first is that prior day low. That prior day low. Remember, anytime we see a trend fail, they're always going to go back right to that prior day low. The buyers had control yesterday evening when they failed. It's pretty easy, right? Strong move down, held the pullback and go. Once they held that pullback shortly after 9:30, you knew this is no longer a bull market. This is now a bear market now, so stick to being a seller. What is really interesting here, though, is that we see that very nice little well-behaved bear channel and then a very typical two legs down, right? One, two legs down, measured move, and that's where we are. This now turns into, again, measured move down, major support. You can see the wicks at the bottom of those candlesticks acting right as if. And, of course, we have this channel rotation. This channel, although it's not drawn how I typically would draw it, almost look at it like a spiking channel. And again, remember we said earlier, make sure you stack the deck, not, psychologically, right? Don't stack the deck in your favor. Try to find conflicting signals that would tell you where you need to be navigating around the opposite side of the market, right? Think of all the different players in the market. If you're bullish, what would the bears be doing right now? All right? More to come on that next time. Boy, what a great newsletter for you guys and gals tonight. Hope you learned a lot. Hope you guys can use it to earn a lot tomorrow. Don't forget, we'll be in our trade room tomorrow morning at 8 o'clock Eastern Time. And before I let you guys go, don't forget, if you want to learn more about the strategies we use here at School of Trade, I would love to teach you all the who, what, where, when, and why. Join the free trial. You get a great free trial on the homepage of the website. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link. Come join the free trial on the homepage. Learn what we're all about here. And while you're here, don't forget, check out our 3 levels of membership. And I'm always here standing by. I realize most websites these days are automated with robots and pre-recorded messages. But I'll tell you, when you call the office, you send me an email, you jump on live support, I will pick up the phone. I look forward to working with you guys. Right? I really, really enjoy that part of my job. And I hope to speak with you guys soon as well. Have a great, great day tomorrow. If I don't see you guys and gals tomorrow in the trade room at 8 o'clock Eastern Time, come join me again tomorrow night, and we'll do it again. Same time, same place in the mañana. Adios, amigos. Bye-bye for now.